Okay, hello guys. I am going to share one really good trade and one pretty bad trade. Okay, so this analysis video is about this week, which starts on Monday, February 21st. And the bias for the week was, well, bearish, and it was because of shit. Okay, this fair value gap being rebalanced, and we have this three candle high formation, and plus the week before the previous week we got this big red candle which made this an order block. And I mean, yeah, it is the engulfing candle or something like that. And then the week prior to it, uh, we rejected off. I mean, just a minute. Yeah, we get this big red candle, and then the next week it goes up and then it comes down. We get a bearish close to its low. And so coming in this week I had a bearish bias. So where is Monday? Okay, yeah. So this is Monday, and the open had this small volume imbalance, and we had a small volume imbalance, and we had a small volume imbalance here. And I mean, plus this whole candle is like an area which needs to be rebalanced. So coming in, I had the expectation of that Monday might be bullish because the first day of a bearish week. So Monday's candle would be like a green candle, which would kind of rebalance this candle, and then from Tuesday or Wednesday we'll start a bearish expansion. But okay, let's go deeper into Monday. Where's Monday? Yeah, this Sunday. Yeah, Monday. Oh, I already had it. So on Monday, what happened was price first it rallied up. It filled this. If we go on the 4 hour, we have this order block, plus we have this 4 hour fair value gap, and we have this high in the fair value gap. So this is called a institutional order flow entry drill. And plus we had this daily volume imbalance above the volume balance it created on the open of the day. So after the okay, wait, yeah. So after this, I changed my bias to bearish because all the levels I expected, I mean, to be honest, even the levels I didn't expect to get filled got filled, and then we get a big displacement down, and it's like a 1 hour market structure shift, like high and then high, higher high, and then breakdown. This kind of becomes the breaker block, and in the 15 minutes, it's like even clearer. Like, but we get this here, and it's like accumulation, manipulation, distribution. And okay, I just noticed that I did not see this chart as accumulation, manipulation, distribution while I was analyzing it. I just saw it as a market structure shift, and which was enough for me to have a bearish bias. And I think, yeah, this is the benefit of making videos. Okay, so then let's mark the New York kill zone. It starts here, yeah, and ends here. So this was London kill zone thingy, and before New York kill zone, we get this higher high. It went above the opening price. It went above Sunday's open. Sunday's open is basically the opening of the week, so you mark that. It's important. and we get this, and I mean, it was perfect bearish scenario. I like to take my entries off of OTE, and I saw this a good opportunity for a London to New York OTE entry. So I'll show you. How, so basically, London to New York is basically like you mark this high, you take this, and you expect an entry somewhere around this area. I expected, but I did not get it, and obviously I did enter then. But here there was like no clear OT, it just came down. And this is something I kind of struggled in the past with, being fixated on OTE entries, and if I won't get them, I just wouldn't take any sort of trade. Like after this, I would like extend this OTE here and then wait for retracement here. But one new thing I learned in the mentorship, it was that, I mean, it's kind of obvious when you think about it, price does not always give OTE after OTE. So if you look here, price already gave a deep OTE here. It came to this order block and it just went down. So like after this deep OTE is given, it's kind of stupid to expect another OT, and I realized that when this happened. I mean, I was still waiting for this. I mean, if I would have gotten it, then I would have entered. But after this displacement happened, I was like, okay, we are. It's kind of stupid at this point to expect another OT. So I mean, is it here? It's kind of roughly around the 50% of the fair value gap. Yeah, I marked out an entry around the 50% of this fair value gap, and if you do this, this is also like an OT thingy, and I did not expect to fill completely because we have all this consolidation area. So I was like, yeah, this seems like a good enough mark. Again, my target was this low. It was like the only significant low below these lows. I mean, if I would have targeted this low, then that's like a bad RRR. So yeah, I mean, as you can see here, the trade played out perfectly, but I lost money on this trade, and that happened because of a genuinely stupid mistake I did. I mean, it was lazy on my part, and I'll tell you what that mistake was. As I've told in the first video, that I find trades on DXY, and then I go into other pairs like Euro USD and GBP USD, and I find trades in those pairs. Now, the thing with matching pairs is, I mean, I don't see, I haven't seen anyone talk about this on YouTube, and I am not the first person or whatever. If you join Omar's Telegram channel, he in his free videos he has taught this concept, and it's basically you. Okay, so DXY is the pair from which you find trades on the other pairs. DXY is like the main pair. So if DXY is bearish, what pair would you choose to pair it with for the best possible results of your pair? The pairs are inversely correlated with DXY. I mean, it's like if the DXY is going down, the other pairs will go up, right? So if DXY is weak, you need a stronger pair to pair it with. In this case, I took entry on EURUSD here. Let me just mark out the trade. It was somewhere around this point, I assume, and the stop loss was, I think, here, maybe. And yeah, the target was something like this. I don't really know. Now what happened was, here if you see my, I think the stop loss was here, because like I did not even expect, I don't remember. where's the price? 1.21294. Where's 1.219? Okay, it was here. On the DXY, it played out perfectly, but on the EURUSD, it hit my stop loss, and then it gave me the target. As you can see, this move was here. On the DXY, this move gave the target. The thing I chose Euro USD because on the Forex Factory calendar there was a JPY bank holiday. I just scanned through the Forex Factory calendar. I saw JPY bank holiday and I misread it as GBP bank holiday. So I was like, on bank holidays, you don't trade those pairs because of less volume. I was like, okay, GBP has a bank holiday, so I'll just trade Euro USD by default. But if you look at GBP USD, the trade literally played out perfectly. It didn't even go close to my stop loss. Like, yeah, and I'll show you what I mean. Euro GBP, 9, around 9, right? Okay, yeah, I've already marked this stuff out. So I took the trade around, I think, okay, I don't remember what time I exactly got into the trade. But I think this candle 9:15, okay, 9:15, 9:30, yeah. Euro, yeah. So this time, so this is 9, and all of this has happened before my trade. Now what has happened? We had this low, we had this high. Price took this high and displaced lower. Big red candle displacement. What does it show? It shows euro is weak, and then the next candle rebalanced it. Like it's such a nice rebalance. Like if you think about it, I wouldn't look at it as a reversal by any chance because it's an order block and it's basically like a market structure shift because like high 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 and then yeah lower low with big displacement. And then if you look here, I mean you can consider this as a rejection block. And I think if you go on the 1 hour, do we have, yeah, this is like a fair value gap area, right? So it's like basically euro is looking weak right before me taking my trade. What does euro being weak on the euro GBP mean? It means GBP is strong and our bias on DXY was bearish, so I should have had a trade on GBP USD. And if I'm being honest, before today, I never really took this seriously while backtesting. I was like, I mean, it's too much work. I'll just do it seriously when I actually start trading. And before that, I just like scanned through Euro USD and GBP USD, and whichever pair kind of like looked similar, like to the DXY and like looked clean, and I just took trade in that, or whichever had like the red folders in it. Yeah, and it did not work out well, but it wasn't that obvious of a problem for me to change it. But after what happened today, I'm gonna start taking this Euro GBP chart seriously and the pairing with DXY. So wait, let me check how long. Okay, I don't know. I think the video has already been pretty long. So I will probably talk about the next trade on the next video. But like, yeah, so I should have paid more attention to it, and from now I will. And yeah, that was my analysis. Market structure shift from an higher time frame PDRA, open high low close bias, open high low close weekly bias, and a good daily bias. Yeah, it was a very simple and a good trade. And yeah, that's fine. And as you can see, I lost money on that, and I lost the next trade as well. And that's why I am currently at an $800 loss. Yeah, thank you guys for watching my video, and yeah, bye bye.